Okay, guys, sorry for the delay there. Still seem to be having a few little issues with the NBN. So, since the move, if anyone doesn't know, I've just been moving over Christmas. So, everything should be up and running okay. And I've got a backup internet through my phone, through the hotspot, which should be good. We'll just see how that goes. There we go. Everything's there. So, just let me know if you can hear me and who's in. And then we'll get up and running. Fantastic, John. All right. Welcome to Trade Setup. Was it the second live stream of the year? I missed one last week, so we're actually just moved in, didn't have the internet up and running perfectly. So, well, the NBN anyway, it seems to be about the same speed as the phone at the moment. The phone's going to be plugged, put it near the window just for better reception. So, all fun and games when it comes to the internet. Wish you had some better internet. They could really improve things, but yeah, do what we can do. So, anyone that's new, welcome. Welcome to the live stream, the Trade Setup live stream. And just remember, we've got our general advice warning there. We don't give specific advice or anything. It's just our own opinion. So take some time to read that at the start. Also, as I usually say, join us at Twitter, at trade_setup. You've got your Facebook along the right-hand corner. And bottom right, just subscribe to us at YouTube for bits and pieces that are coming through. Good to... Oh, States at 10th. All right, so yeah, thanks for joining me. We'll get into it now. So probably I don't suspect it to be a big stream today. I also going to go through some bits and pieces and what's happening, where we're at, have a bit of a look at the overall markets. I mean, powerful market at the moment, and they just seem to be ticking along. We're getting dragged up by the US. I suspect it's a lot of ETFs that are dragging this market up. Getting a bit, I mean, a lot of the times the moves are made overnight session with the US, and then we sort of stagnate during the day, chop around. We're sort of pushing lower a bit today. After the open, I went long on the SPY and got up a few points, and then that just turned around and chipped me out before heading south a bit. So it's a bit, I think it's a bit opens up, gaps up on the open, and then there's some gains being locked away by a few people, which is probably smart. We've got a US holiday tonight. When you see the ASX, let's just go over here. You see the ASX looking like that. It's a near vertical move. That's pretty strong in anyone's book, and then sooner or later that has to run out of some steam. I'm not saying, I mean, the hardest thing, and this is the hardest thing in trading, is trying to pick the top. You don't try to pick the top as such, but just trying to, not load up to the hilt when markets are looking stretched due for a pullback. But then again, you've got to be in the market in times like this when it is going strong. So yeah, it's making it a bit tough at the moment, and the US is just ticking along nicely. They seem to be gaining every session. They've got, like I said, a public holiday tonight, and I think on the weekend, the US came out and said something about, with China going to buy more goods up to 200 billion, I think, over the next couple of years, from US producers. So that's supportive of the trade deal and things stepping forward. The US economy is doing quite well. They had some housing figures out on Friday night, which is supportive of their economy. So, I mean, with rates where they are, where else are you going to put your money but in the index or in the overall market into shares anyway? So you're not going to get any yield for bigger punters. Not going to get yield in the bonds, in the US bonds. So you can just really plug it into equities. They're still going up, and that's why you keep getting support day in day out. It seems to be in the US market, and also it seems to be that little pop on the US dollar, maybe overseas funds. I mean, Europe, although the indexes are looking okay, the DAX is near all-time highs. I think the economy themselves are not, they haven't shown signs of strength, just signs of, that downward pressure easing. I think I can't remember what we are compared to the US, but the carry trade. Well, not really a carry trade over there either, is it? I don't know if anyone's familiar with the FX carry trade. You basically they go in search of higher yielding currencies and selling the lower yielding. So with regards to Europe, yeah, US they're negative, basically negative or zero, whereas US is 1.5% or so thereabouts. So the carry trades into the US dollar. Where do you plug your money straight into US shares? So yeah, interesting. I suspect that just will keep ticking higher, and it just makes the day sessions on the ASX a bit tougher than usual. If we go down to the intraday session, you can see it sort of popped up on Friday, sideways, popped up sideways, even lower on Friday, Thursday, a bit the same, a bit better on Wednesday, where it sort of opened up and sort of gradually edged its way higher. But that's not, that was a few days in a row which we've been up rather than the next couple of days. A bit of profit taken on the Friday into the long weekend in the US, probably some a bit on Thursday as well. Um, but that sort of move, yeah, you've got to take stock a bit. I wouldn't suggest, like I said, loading the boat. So you have to have some exposure because you don't know where that's going to. There's no one said just because it's overbought, we look at the stochastics, say, okay, that's overbought. Okay, that could cross down. Doesn't mean anything. If that crosses down, the market could still go up. The stochastics are not going to tell you what the market's doing. The market's going to tell you if it's continuing to make, daily takes out the high. Say we get up towards, we pop out 20 points into the close, which we could easily do. Running to be up 37 if that's the case, trading around 7,100. You might have thought, okay, a couple of days ago we'll lock in some gains, it's overstretched, and 2 days later you're up another 100 points. And then, okay, we'll lock in some gains there. And another couple of days you're up another 100 points. So you don't want to be picking the tops. You just want to be careful. Guess what it comes down to is knowing exactly where your risk is. For example, this one we've got on APT. I'm very risk adverse by nature, I think. So I would prefer to, in times like this, when it looks like it's a really bullish market and we're holding higher highs, higher lows, it's more that Dow theory kind of pattern where it's quite easily, and it's a more, not a subtle, controlled rally. Happy to let risk a bit looser because it's a bull market, everything's going well. But when you've got the current market, which is going bang, 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 day after day, once into new highs in the ASX, it's really hard for me to just go, let's just have risk really loose on all our positions. Because if this thing comes turning south, it'll probably happen quite quickly. And when it happened back in October, I don't think there was any real cause for that. This was last year, no, the year before, 2018, when we got smashed. That was sort of out of the blue. And then the news will find reasons why. But generally, most people didn't know why it headed south. And then, well, let's just go back to it. Where am I? Go to the ASX, best fit. Weekly, is that the move? No, here's the move. So that move there, so we can just drill down on that. No, I've lost it, haven't I? That move there, so we go up here. We go there. So that there, it was chopping around there. Once it started selling off, you got a bit of an indication where, I think that was it there. Oh God, I don't even think that's a trade I was talking about. No, here, it's way back here, way back here. So that was last year. That was back in August. This is September 2017, so 18. This sell-off here, once it was gradually, grinding higher, and then you got that shock suddenly lower. All the bears, there would have been a lot of people going, "Oh, we'll buy in the dip, buy a bargain." It's just a bit of a pullback, but you can see that price action then led to a severe sell-off. So it sort of came out of the blue, but by this stage, we knew what was happening, as in the news had come up with some sort of excuse why it sold off. But generally, coming up, leading off to that sell-off, that was a bit, and this was probably the heads up where it got sold down here, back down to support, got bought straight back up, traded to new highs, and then failed again. That was a bit of a heads up that potentially there's something to be careful about. Different scenario now, but still, you've got to be on guard when the market starts showing you what's happening, the change of, I guess, intricacies. Whereas when we're trading up until that point, the market was, holding slightly higher lows, slightly higher lows, slightly higher highs, and so on. This is the first time it really pulled back to the most recent high low, tagged it. It did bounce straight back up. So that would have sucked in a few bulls and then turned around and just, sold off straight through the MAs. And that's not what you want to see if you're expecting that market to go higher. So yeah, I think at that stage, if you hadn't closed there's no reason whatsoever to be bullish on the market. it was more to be bearish, and that's I think when we're trying to sell the ASX, just missed out, which is a bit of a bugger. But all in all, you can see that that action was telling us something, not the news, not your stochastics, not anything else. It was that price action. If we're struggling to get back above the MAs, that's not a positive sign at all. So we've got to, I mean, saying all that, this market is powered along. It's sort of the opposite scenario. It's getting ahead of the MAs, well ahead of the MAs. So that's a stretch market. But then again, a market can be stretched for a lot longer than what you expect. It can keep powering along a lot longer than you can expect. So you're not trying to pick the top, you're just trying to tighten up your risk. So if we go back to the APT example, this is not normally the way I would trade it as such, but knowing that you've got a market that's getting quite stretched, the overall market's quite stretched. I'm not willing to throw too much at this and have risk very, very loose. Technically, I'll mark up the entry. I mean, most of you would know the entry anyway, and if you haven't, you want to buy it now, good for you. That'd be great. Thank you very much. So this is, I think the entry was about here. You can see big flush, whoops, one step, big flush lower. That sort of two moves we always talk about. And you can see the steepness of that was, really caught a lot of people off guard, stopping them out below that level, smashed them, bit of a bounce, another pullback. Sorry, I should tell the kids to be quiet. You can hear them in the background probably. So yeah, we got smashed down there, and you can see the second sell-off was holding above a key level. This is more of a weekly key level, I think, on the afterpay. So then it bounced, and you've got some good solid price action. Took out this most recent lower high, so it was starting to get bullish again. Failed a bit there, had to wash it out. So when we come back down this second time, as opposed to this area, you've got a couple of good levels to start working off. So that's fine by us. It was looking good. The ASX, yeah, it was getting overstretched. I think it was only a couple of days ago, the end of last week. But there was room to move on the upside. So once you've, from the entry just in here, this is basically entry, I think, that day there. So once that kicked off, then you start having to look to resistance levels and seeing what the overall market's doing. The overall market's obviously got a bit more stretched. We're coming to resistance and we're starting to react there, back at these levels through here. So once you start to react there and you start, even if it is, to me, I don't mind that little, it's holding the highs. It's a sign of strength when you don't react straight away. If you don't pop up into resistance and come straight back down, something like this, you push up and then straight back down. That's not a sign of strength. If you push up into resistance and start chopping around holding it, there's buyers stepping in and willing to support that. That's not the best of charts, but you know what I'm saying? So that's a lot different seeing something like that at resistance than a pullback like that, because that starts to show you that people are quick to take profits. So I'm quite happy to hold this. I don't want to be locking away profits just yet. I think there's a chance that we could really push up into 37. But on the flip side, because of what the overall market's doing in the US and everything, we're not saying I don't think it's going high. I just don't want to be throwing too much risk at it. And I think that's for me, I find that's my character. When overall markets are looking stretched and we all think there's going to be a pullback, don't try to guess it. I think the only other option you have on the table is really to just tighten up your risk on your individual positions. So if you can't go through your charts or your stocks that you're holding and see a clear level where you can hold risk, then you probably want to start doing that. Or if you haven't even thought about that, you might want to start doing that. Just because of what the ASX is doing. I mean, it's going higher. There's nothing much to say about that, but it's got a lot of room to move on the downside, say 66.75. We don't know what news is going to come out. If this thing starts pulling back from here, we don't know what's going to happen, what's going to trigger it just yet. It's going to be after the fact, and if that's going to create a bit of fear, you could see a really serious sell-off, because we all know the US is overcooked. We all know we're getting a bit overcooked with this sort of run-up. Again, like I mentioned before, that's the only place to put your not risk, put your money to work for you to find some yield into shares at the moment. But in saying all that, it's just human nature. If you're sitting on some healthy gains, you do not care what the market's doing, what it's saying. There could be trigger, and the fund managers are no real different. When they're looking at some healthy gains, they might tighten that risk up too. I wouldn't suspect that they're going to be sitting there with not taking some risk off the table when markets are starting to get really stretched. So fundamentals are not. It just, to me, I would look for correction. It's how deep and how far it could go. And that I think is more dependent on the fundamentals of the overall market, your macro environment of the US, Europe, Iran, your trade war, all these sorts of things. And I think they're actually pointing in a positive manner at the moment. It's just you just have to look at it and say, look, well, for me anyway, though I'm viewing it, everything's looking better than a while ago. Say in the US, the economics are looking good. The numbers, data, jobs. I mean, jobs can only there's only so many jobs you can. They're pretty much full employment now. I don't see how that can keep getting better jobs, but they just don't want to start seeing jobs being lost. But I think the big factor which could have triggered that was continued trade war, and they're starting to sort that out. So yeah, a lot of the pressures I think to the downside that could trigger a big sell-off, maybe starting to lift, but it's that outside of thing that we got to worry about. So either way, I mean, when the markets are doing these sorts of things, they're just ticking along nicely. It's always good to be on the safe side. I mean, that's for me anyway. I mean, if you're more aggressive, great. But if not, it's worth just thinking about what's happening in the overall market. So if we just go to a trading view and just go through a couple of charts, try to keep on top of it. The S&P, that's our daily. I mean, that was a channel. We just blew the top of the channel. So that's going near vertical. Anything goes in near vertical, I mean, look at that. They can have a really big correction, and that's the concerning thing. If it goes from a higher height or a higher level, great. We may not. So we may, looking at this at the moment, so we can have a pullback to 28.38. If this keeps going, we may be looking at a pullback to 30.30, 3100 on the S&P, which is not so bad from here. Might be a lot higher by then, but the way it's looking, it's very strong. And I think if you haven't been thinking about your risk levels and what's going on, I don't think you're doing yourself some justice at the moment. Very important. So yeah, that's looking a lot like this. I mean, not to say that it could easily pull back to the MAs. It could just drop, 100. I guess 100 points on the S&P is quite big, but that could do that in a couple of nights quite easily. Like this kind of move back and then start consolidating and go again. I mean, we just don't know at the moment. So, but I think we're looking for a swing high. Most people would be looking for a swing high, but any smart trader is not trying to guess it and selling out now, because I can guarantee you the kind of person that would have done it, way back here looking for a swing high, 30, 20, and you missed out on 320 points roughly on the S&P, which is a massive move. So you don't want to be guessing high. You just want to let the market show you what's happening. So on the S&P, just looking at it now, I'm on the weekly. There's a level just in here, if you can see that, 3208, which if it breaks down there, you might expect a lower high after that, or you might expect a bit of a profit taking to flow through, which is right down here, this zone in here. But we'll see. NASDAQ, a bit the same. They're in reporting season now, so whether it's a bit of buy the room, sell the fact, you get good reports, they sell into it. They're going to have to upgrade their forecasts, I guess, for this market to continue to be buoyed. Don't know. We'll just watch how that plays out. The Dow, I mean, still kicking along. It's not quite as steep, as hard, and it's gone as hard as say the Nasdaq and the S&P, but that's a near vertical movement. It seems to be steepening. When things are steepening, that gets me concerned. If it's not controlled like this, that a controlled move like this, you get some heat come out, it makes a higher low, it pushes to new highs, then you get your pullback, some heat come out. It's just building positions. It's a constant flow of new money, people booking profits and new money coming in and booking profits and so on. When you get it going near vertical, there's been no real of booking profits, and the higher it goes, the harder it goes, the more likelihood I expect a deep pullback, or sort of a fearful pullback, if that makes sense. But we'll see. That's my risk adverse nature. DAX is near the highs, all-time highs previously, so I don't know if we got there on Friday, but that wouldn't be surprised if we push into new highs in the DAX soon and just continue to march higher. The longer term charts, that's quite conducive of pushing through those highs. It might be at a point now where, okay, it might wash it out, fall back below that support zone and just start consolidate. We'll have to see. I think they're sort of sitting on their hands a bit at the moment. The FTSE, these are the highs, previous highs from, January 18, later on in May, and then what's that last year? Failed a bit lower, mid last year, July. We're getting back up there now. So the markets, they're all up at highs. And when you've got low interest rates, it's, how much more free money can they give out to support this bull run? What else we got? What else we got? Oh, we'll go into crude. Crude oil. Basically, I was looking for this support to hold up, starting to hold up, but I want to see it sort of retest to build a higher level, and I think that's got some upside to it on oil. So there could be some moves into oil stocks, energy stocks. We'll have a look at those if you want. And that was crude. I know there's been a lot of, so I'm sort of looking for this move. That's your initial thrust up. If anyone can see that, just get rid of that. Sorry. So that's the initial leg up. We've pulled back. We've held this key level at 51.35 on oil, and we've tested that 3 times before we started to lift. I don't think this lift is finished just yet. Big washout. We've got just a touch below that 66.68, which is the previous highs. I'm expecting more that second yellow arrow, which is an extension of this leg up, which is just an even move up, you could say, off this support. So we're moving off that high low. So if that's the case, we could start going sort of parabolic up until 6 to 75, thereabouts, really pressing hard up into that zone where I would expect the reaction lower or something, maybe a bit of a washout. I think this is longer term downtrend, this yellow line. We'll just go to the weekly. So that's your, well, sort of a longer term downtrend. So it'd be interesting to see what happens. We can push to 75 and then it has to do some work, and then it could be support zone down here, another support zone at 50.35. And if that can extend to 75, we might be looking for another higher low and then take us right to 85, $100 a barrel. Who knows? But at the moment, I'm just looking for this zone to hold, maybe, a retest. If anyone can see, we've just popped up a retest, something like this. If we can get that and then lift, that's what ideally I'd be looking for off the support just in here around, what's that, 57.30 thereabouts. But I guess you can see that. That's the kind of style. You just want to see that inside high low. It's good evidence that buyers are stepping in. They're willing to support that, especially if it comes back down to retest and we get a higher low like this, then that would be ideal. So that's what we're basically looking for. So that's oil. Gold, I'm not a massive fan, only because, not a massive fan, I mean, I like gold. This could be a higher low. It could just, I'm sort of more looking for a flush lower, just to flush out a few longs that get built up, because like we mentioned before, the US is in a good position economically. They're doing quite well. So for the safe haven buyers, I don't see any reason to be a safe haven buy into gold at the moment. So it could just be that the bears are sort of sitting there waiting for maybe an opportunity to start sending it lower, wash out a few of those lows, clean out a few late buys, and then reset and build for a bigger move. But I think a bigger move through these highs, I don't see any reason for it just at this stage, unless fear starts gripping the market and we get a major sell-off in the equities. A big sell-off in equities, there'll be, once you start closing out some money there, where you're going to put it probably into some safe haven like gold, the yen, things like that. But at the moment, I just don't. I've got my eye on gold. Obviously, I guess a lot of people have. There's a lot of gold bulls out there that expecting that to march higher, but it's got to be a safe haven bit, I guess. G'day, Laurent. He's back. All refreshed. If anyone has problems with the stream, just let me know, because I probably won't notice it. I'll just be chatting away. So that's gold. If we go into a 2-hour chart, it's, we've got a zone. What I'm seeing, it's a key zone through, was it 1550, say, but there's just a little sort of resistance zone through here. If you can see, it's a minor level here, which it pressed down, went and retested, had a deeper correction, and it's been holding some little minor higher lows back up into that zone of around 50, say 1562. I don't see this as very enthusiastic, that move up. It's not like this where it starts to, you want, with action like that, let's just draw that again. With action like this, I don't see that as, like I said, strong. You want something where it plows up into it, so you get a good move up. That's really contained. That's not an aggressive buying up into that zone, a bit of a flush here, some slow buying back in. That's not, the steepness of that move is really nothing. So it's hard if, yeah, Pete, I'm getting a message through just then, so hopefully you can hear me. I don't know how many messages you might have sent. All right, so that's the the move up in gold. So I'm looking for that, this to hold, and that another flush lower potentially, and then we'll have to see what it can do below and have to reset a bit more. Maybe, maybe not. I mean, if we do get something untoward happen in the equities, it comes back on, the US comes back and starts smashing into them. I don't think so, but if they do, that's where you're going to get your safe haven bid, that sudden $20 rally in gold. I just don't see why we're going to trade up to these highs right now. It could be a real gradual move, but that's going to start triggering a bit of concern if you're a bull to see this kind of things. If you bought it in this zone at say 1550 and above, and you're sitting on a little profit and it's not getting on too much, yeah, new computer feed, it's always good fun. Yeah, if you're holding off this support, looking for that to kick on, and you're just waiting for that acceleration higher, something like this, this kind of move. And if you don't get it and you start to take out some of these lows, then you're going to get concerned. That could start triggering a bit of a sell-off, but it's just where to. You got to remember, this market's more psychology than anything. I mean, most price action is about psychology. You got the differences in moves, the different styles. You can see that's quite clear. That's bullish. There's no one standing in the way of that move. But this move up, even though it's gone up, say from 40 to 60, it's $20 rally thereabouts. There are sellers in the way there. There are some people willing to offload a long position, sell into it, or maybe some shorts. We don't know, but there are sellers coming in to soak up that sort of buying pressure. That's not a good sign if you're a bull, but nothing's confirmed just yet. All right, that's gold. It's probably about it. I mean, I'm looking at also just keep an eye on what's that, copper. Just go back to the daily on copper. That daily, let's take this off. This is your daily on copper. There's a key, a major bid zone down at, was it 2.51 or 2.5, way down here. And then you've got a high low presenting itself, and then you've got another high low that's basically forming at, say, 2.75. And that would suggest to me we're going to start looking towards that 297.50, and supportive of that would be the trade deal coming through, the phase one. Maybe it's going to be contained because you don't know what's going to happen in phase two, and they've got US and China still got a lot of issues to work out. It's probably the biggest issues to work out coming into phase two, but it's well timed for the 2020 elections, so don't expect anything before the elections. The way it took, the length of time it took the phase one to come through, I wouldn't expect that to be at all through 2020. I think phase one sort of got through because you need to buoy that market. We're going to highs, everything's looking rosy again. He's going to get Trump will get himself some votes. Yeah, so I think with copper, I would suspect it's going to be sort of held up around this, and the higher you go, the closer we get there, we're going to start some selling coming into the price on copper, which we just saw. You can see that on probably the hourly chart. This kind of move here, you got this big push up, sell off through the high low, and then it recovered and went straight into new highs. Big sell off. So sell off got a bit sharper than this one here, the original sell off. So this is what we're talking about. That sell off there took out the lows. Let me just make that a bit bigger. There we go. Come on, what's going on here? That's what I want. So that sell-off as opposed to that sell-off, and then we got smacked down again I think on Friday night. It did rally. It gave up those gains. So we're looking if there's a support line that breaks. There might be a deeper correction in play, coming into play of this move up, and it's starting to fall apart. I would suggest that potentially is starting to fall apart. This is going to be a lower high, and we're going to start getting through, this bid zone around 2.84 thereabouts. If that produces a lower high, and we're just going to get some profit taken. I think longer term, yeah, that should be supported. But like anything, if nothing much changes, still some weight, an unknown to weigh down the market, you're going to get profits taken. The higher it gets, the more stretched the market gets. You're going to get people just willing to take some profit. So yeah, that's all. I mean, all in all, I'm still happy to be long the market. We're not loaded. We've only got about 4 at the moment. We've got some alerts looking to go, but they seem to be the 3 that we've got waiting, or 4 we've got waiting, the ones that are going down. And pretty much doing nothing when the market's going up. So, you can't do much. I think the main point to note is, at this stage, is the way these markets are, know your risk, know exactly where your risk is. And the second thing is to really take your A plus prime, number one setups, high probability setups. And they're not, it's a bit harder. If they're getting harder to find, that's not a bad thing. It's a bit of a heads up that, yeah, this market's looking a bit stretched. So don't dive into anything willy-nilly. It's be selective. You could probably, the higher it gets, the more selective you really should be with your trades. You just don't want to get caught holding, getting into something when the market gets chopped around, especially if market's been rallying for quite a while. Because if this market turns and any stock that's been going up quite consistently, quite hard, and you just bought the first pullback, I'm talking, anyone that doesn't, I'll just close this down. I just want to show you exactly what I'm talking about. Here we go. Okay, so the two differences. If the market's been going up like this for a while, and you're looking to buy in that zone, and with the current ASX the way it is, that for me, it's a solid trend, but that could be, if the fear starts driving the market, could be a bit of a problem, because you've got so many people loaded long, and fundamentals are not. The market's, this stock, if a stock's sort of playing out like that, it's been the last year or so, it's just been heading higher. They could be the first ones that start to get hit. I'm not saying they will. There's some that will be fantastic and then everyone loves them. There's no real reason, and they may come back a bit. They may get a lot of that selling getting soaked up. But generally, when proverbial hits the fan and the market goes into corrective mode, um, these sorts of ones have got a lot of people stacked long. They're going to want to take some profit if they're fearful that this market's having a bit of a meltdown, as opposed to, I mean, I love these sorts of things when they've gone up and you start getting this. Well, let's point out the best chart. Pops up. This is your longer term, and then we get a bit of a corrective action, take out a key level, and then we start to hold. But I didn't draw that well either. Let's start that again. Because everyone knows what I'm talking about. 1, 2, you've had a couple of legs up like that. You have a deep correction, takes out that, the anchor level to that long-term uptrend, and it's resetting itself. You start seeing signs of it resetting itself. That's what I love to see. Because if you get into something like that, to me, that's got more probability once it starts going, because you've already cleaned out. So this move here has already cleaned out a lot of traders, whereas this hasn't cleaned out anyone just yet. When you buy here, it could just pop up, go through, and then bang, collapse, and then clean out a lot of traders, and you caught with a negative, position that's going against you. So that's what I'm looking for at the moment. I'm looking for setups that are a bit more, they've had a bit of a clean out. So if I happen to, with the ASX up at sort of this 7,100 zone, and it does have a bit of a pullback, I could weather the storm, I would feel, a bit better with a setup like that, as opposed to something like this. Because we don't know, like I said, we don't know if it's going to be a fear-driven drop or just a bit of a sell-off from profit taking, and the market's still showing strength. We don't know yet. We just have to wait and see. And I guess majority of people are expecting something to happen. It's just to what extent. So that's about it. Do you want to put in any charts, any stocks you want to have a quick look at, and we'll have a chat? One I didn't alert to MCR. It just I don't mind that at all. That's a good looking little chart. That's heading higher. Being what was it, Mincor? I think they did nickel. I think that was it. Been a little minor. I thought they would get some support. I think miners could be the way to go. I'm just guessing. This is just me being a non-fundamental analyst, trying to get a macro picture of what could be supported, what could be starting to look good. Although there's a bit of a seller there, which is a bit of a shame. We'll see how they go. But yeah, that looks quite positive to me. That's your weekly chart. And if you go and look at, drop at one level, that monthly, to me, it's all the same. Time frames, for whatever reason, got a big run ahead of itself up to $5, got smashed back down, obviously. That's the GFC. It's found the base here and it's starting. This is the first time it's been above the MAs for really a long time and holding. This is the monthly chart. So if you take that into account, normally you retest the MAs, it sits on the MAs, you start to push higher again. So the monthly's looking good. The weekly sat on top of them, rejected those MAs, or sitting on top of the MAs, which would lead that we get through that high, and we'll sort of push up into this level somewhere around 90 cents. And the daily just as well. So with some good little volume coming in. So I think there's some room to move on the upside for Mincor. I think it looks quite good. We'll just see how that goes. Anything else we've got? I mean, we've only got APT. Like I said, I'm happy to tighten that risk a bit. I was going to put it at 32. What do I want to do? It's just here. I was going to put it about 32, but I figure we'll just see. I just want to see it pop through before I tighten it too much. Pop through the high at say $34. I want to see it get through 34, and I think it'll be a hard and fast run straight up to sort of 36, 37 zone, those previous highs, potentially test into new all-time highs. So, I mean, if it fails here, don't forget you've got to remember what you're looking at too. The potential for a key double top. So these are all the sorts of things. This is another sort of key reason why I'm looking at. Well, let's just take a step back. There. So for me, there's sort of this zone in here, which could be a double top. Not the world's best, but if we get a bit of a reaction quite hard, especially if we get trade, if we get done at 31.5, that's a fairly decent correction off that high, off that 33.5 to 34 zone, which I think they could easily lead to. We've sort of pushed up. We've sort of, oh, that's not very good. Just drawing it here. Popped up here. We've come back. We've popped up. Maybe something like that. Some action like we've traded it, get a lower high, come into play. A lot of people profit take. Maybe the market's overall heading south a bit, but we'll see. But that's what the two things. If we break here and we go into a bit of a pullback mode, we don't know if this double top's going to come into play below a key high, especially after this correction lower. Does everyone see what I'm talking about? So that correction lower took out an anchor level to this uptrend, took it out, we started to go again. If we're failing again at a lower level, it could be a heads up. There's some serious selling to come. We don't know that yet, but that's one of the reasons why I'm happy just to tighten up that risk a tad. All right, let's get on to SSM. No, I'm pretty sure I've seen that one, Pete. It's just, so SSM, it's got all the hallmarks of, holding up and doing well. If you look at this action, we've got a big uptrend. So this is something I wouldn't want to be buying into something like this. Up here, you get the first pullback, you buy into it, goes. You don't know what's going to happen. I know that, but probability, the further you go higher, the more you go higher, the likelihood starts to flip from a high probability to low probability. So that's always in the back of my head when I'm buying the things like that in just these little pullbacks. Where it's come from, what's the longer term from weekly starting to say, up here you go, that weekly's been going up for 1, 2, 3, nearly 4 years. So surely there's going to be some profit taken sooner or later. So that's just what I was saying before about that buying into trend like that. Now, SSM, if we just mark it all up, it's had that corrective action that's cleaned out a few people. So all we can do is look at that and say, what's happening? So you can see this corrective action down here. It's cleaned out of, at least down to this zone. So anyone here has either been underwater and held it or closed out, and starting to look good if you held it. I mean, I'd suggest that these people sort of in that top end of that zone, somewhere up here, have been cleaned out, stopped out, and for whatever reason, they're buying late into the trend there, cleaned out, squeezed out of the action, and we're starting to lift now, but they're the ones that sort of come into the most pressure. And as it's heading south, you don't know how much pressure people can take. But now the fact that we've sort of popped out the top end of this range down, corrective action down, so that's all in one. I'll overlay this in a different color. But that's all that action there is part of one longer term, one long-term move up, one long-term. And so you're anticipating that longer term, we're going to head up something like this. If we take it from about $1.60 up to $3, so $1.50, take it from around here, what's that, to $3.80, you've got quite a bit of upside potentially if that's the move that's going to take us the same sort of extended from low to high. Here's your low, project that out to about 380 thereabouts, let's say $4 even. From where we are at the moment of 275, there's some upside potential in that. But you just have to manage your risk of this leg up. So we're hopefully, if that's the trade now, and we say, Pete, you bought through there, you've got your risk below there. If that's the trade, then we're somewhere at this stage with any luck. And we're at this stage. We haven't broken into new highs just yet. New highs is above 3. Or maybe we're not even at that stage. We could be a little bit earlier, somewhere in here. If that's the case, if we're looking for a new leg up of like that, great. There's not much to say about that trade. I think it's and then little flush, and then it went up. So it's good to see this sort of action, and it flushes lower down to 260 on this candle. This candle here flushed them out and then took off from there. It was positive after that. So that's a good sign. So we'll see how that one goes. A little bit extended on the daily, but I mean the weekly still got a lot of room to move. That thing can just keep chugging along on the weekly up through new highs. We'll see how it goes. So just if you've got that, Pete, just be managing your risk. Be mindful, I guess, of your risk where it's going to be. ALU, it's getting a bit ahead of itself up here. So for entries, I wouldn't go near it just yet. But if we're talking longer term structure, the price, it's in an uptrend that hasn't failed. So this longer term weekly is still heading higher. If we just mark up the risk levels on your weekly chart, you've got pretty key $20, and then again roughly around $30. So if that's the case, we can see this chop through here, retested, took off, chopping around, retested again, 1, 2, 3, sort of in that same zone. Market's still heading up, looking pretty good. So really, if we can get a run on looking at that daily, we might have to have a bit of a pullback, build a high low on the daily, and continue on through 40. We'll have to wait and see. But I would suggest just on that daily, we might get a bit of a swing high here, pull back, sit on the MAs and go again. Something like this. This is what you want to see from now on, I'd say. You can see just on the daily, you've had sort of that 1, 2, 3 move. We might just come back down, sit on top of the MAs. And this is sort of the trend up. We're looking for it to stay within that range, that trend on the daily. Love to see it get ahead of itself, and just maybe something like this would be ideal. Just sitting on top of the MAs before potentially we get that bit of a pullback. Not saying that that's going to happen, but you want to see it sit on the daily MAs. And if that's the case, it might be pulling back to 37, but either way, that trend's up on the daily and the weekly. So you've got the wind in your sails, I guess. AMC. How's everyone going anyway? I mean, the funny thing is, in a market like this, it's not too hard to be bullish. I mean, because if you're a raging bull now, this is the perfect environment. You don't have to think. You just buy things. Generally, they're going up. Especially, if you get into your blue chips as well. If you are a raging bull and you're going to neglect a potential pullback that could turn into something savage, then that's where you get hurt. That's where people can get hurt. That's why I think the aim of the game is to trade the market, not just to. And I know a lot of people would be sitting there looking at it going, "Oh, it's a bull market." You can just buy and hold. Sooner or later, it'll come back. But if we don't, how long did it take us to get back from the highs from the GFC? 10 years? I don't want to be holding anything for 10 years. So I'd rather trade the market. If I'm going to take a bit of a hit on a major correction, then so be it, and start to accumulate better setups, better entries at better prices. Sorry, I got sidetracked a bit there, which I tend to do. Just having a coffee, so. All right, so what have I got here, John? AMC. AMC, I like it. I just didn't. I'm a bit concerned. I mean, look at the candles. It's like a reverse rally. Feeling confident. Nothing wrong with feeling confident, Pete. It's just you've also got to know, like I said, you've got to know what the risk is, and you've got to. If you see, this is sometimes it's good. You buy a good entry which you think's good. You know where your risk is. You put your risk on. Sometimes it's better to turn the computer off and walk away and come back and turn on when the market's closed. If you got hit, you got hit. But if you're sitting there watching it, you might start stuffing around with your risk levels because you are confident, and that could be the time when things just turn south quite hard. You never know, but there's times when, say for instance, this is the ASX and you've got the markets around this zone in here, when it looks like it's starting to go, that's probably where you want to spend a bit more time building your positions up and getting into some good trades, because that to me is looking like it's going to take out this high. And if you do that, there's a lot of room to move on the upside. But when you're so stretched to the upside, you've got to ask yourself, how much further can you move on? So in saying all that, it's probably not the best time to be adding a lot of positions at the moment. Know where your risk is. And sometimes, like I said, if you got a problem with just moving stops or second guessing yourself, turn your computer off and walk away and let your stops work for you, so you don't start mucking around with them. I mean, I can muck around with, actually, I don't muck around with stops too much. I muck around with my exits when I'm in profit. So that's my biggest problem. And so sometimes it's better, if I look like I've got a good trade, I'm better just to turn it off and forget about it, because I'll start looking to take a profit potentially when there's no reason to, and um, just mucking around with it. So I'm better off turning my computer off and forgetting about it and looking what happened during the day, and then reassessing it when the market's closed, reset my stop if I have to, reset maybe my profit targets or a partial exit, put the orders in and turn it off again for a day. Because I know that if I'm looking at it during the day and it starts looking a bit choppy, it doesn't mean I'm going to get stopped out, but I might just take it off. Oh, look, I'll find every reason to lock away that gain. So I think, yeah, there's a lot happening at the moment, isn't there? Now, what was I talking about? AMC. Let's go back to, we'll start off on the monthly. The monthly doesn't look too crash hot. This looks like it's consolidating on the monthly, consolidating below, say, 16.50, 17 bucks. Not the world's best sign. If you drop it down to a weekly, we've had a bit of a flush lower down to 13 bucks and we built our way back up, but you've got to question why we're stalling at that high. So the market on the weekly charts, you've got a high through here. Let's just make that a bit straight. It's probably going to turn a bit nicer. Just 1 second. Kids are getting a bit out of hand playing games. They're very competitive. So yeah, you've got this market, it tried to get up here, which was just continuation. It failed. You got lower highs coming to place. So we've got a deeper correction through that low. We got back down to 13. So that there is a key correction. If you can see in yellow, I'll draw it in yellow. So you move up, pull back, move up, pull back, move up, pull back, move up, fail, take out that low. So the anchor's here. And if we've started to build again and we get up here, and this is where the problem may occur. If we start to fail, say from about here, and we don't, I would just suggest we should be going straight up through those highs at 1650 now, off this high low. If we don't, this could turn into a lower high. And to me, look at the volume as we get up towards those highs. It's easing off. We're stretched up there and we're stretched at a lower price. So for me, especially after what happened with this price action, with this move down here, we've had to clean out an anchor, reset. We tried to reset here, go through. We couldn't. We've reset. We've gone through again and we failed. This failure here is pretty key for me. So I really would want to see. Well, John, look, nothing wrong with that. I guess what I'm saying there is probably backing that up a bit. And I don't know if anyone's noticed, there's been quite a few. We've had some cracking trades. Like, just say you have some good trades lately. I think it's not hard, but quite a few of them have been sell recommendations from analysts. They've got a sell for it. I like putting that up sometimes because it just keeps rejigging my memory, or to say to yourself, I mean, they know about as much as we do. I mean, with a fundamental analyst, there is no psychological analysis going into their trading. They're just looking at pure, dollars and cents, what do you call it, profit loss statements and all the accounting side of it and where it could be going to. Mining's probably the only thing I know, but the price of the commodity, what it should be at, the price of commodity is going up and the factoring in that and all that sort of jargon. So there's no psychological effects to it. So what they don't factor in, what technical does factor into, you're not really worried about the fundamentals. You're looking at why it's going up and why it's getting bought. Things like this is sitting in here. Okay, that may be fundamentally a bit overcooked. They've got a sell recommendation. It's kept going higher because someone wants it. Someone's wanting to push it higher. Well, the majority of people want it still. They're taking some profit, resetting down here, pushing it to new highs. We failed here. So this might be where um, it is becoming a bit of a sell recommendation. Yet the analyst might have been saying a sell for quite a while. You don't know. So that's why I like to look at fundamentals. But I think with fundamentals, you can only see certain things, and that's assuming you know what you're talking about. I mean, I'm not a qualified accountant, so I've only know what I learned with fundamentals, and that's next to nothing, to be honest. I mean, most of you out there would know more about fundamentals than I do, and what this means and what that means. I don't have a clue because I spent more time on technical analysis. So that's why I put so much faith into my technical analysis and what I'm seeing, and less faith in what everyone else is saying. I mean, there's the amount of times I've got out because I've read something or whatever, and I was right and they were wrong. I mean, that's what I'm just, and that's one of the hardest things, looking at it going, okay, the market's saying we're too stretched, we should have been due for a pullback, we should be this, we should be that. Everyone's thinking the same thing, and it's going higher. It's been going higher for a long time. So what does that say to you? Keep buying. Look for your prime setups and buy. Don't try to guess what's happening, because you could miss out on something really good. But yeah, good old financial review. Got a feeling they've either sold it themselves, and they're trying to get themselves looking better or feel better. So yeah, no, I wouldn't be too worried about that, to be honest, John. I don't know if you said you made a handy profit, small profit on that one. I'll give you an example. I mean, we all do the same thing. PAR, I had this one for myself, and I traded this. Where was the buy? Buy was at 32. So on this day here, and on the same day, don't ask me why. And when I'm thinking about the market, I'm thinking all these things. So when you're sitting in profit and you're sitting in on a good, on a trade that's up, we were up only a little bit. It did back off quite a few times during the day, and I'm thinking it was going to fail off this high, which it eventually didn't. It popped through and then sort of finished at it, and you can see what happened after that. So basically, I think I've left, I don't know, 20, 15% on the table. That through trying to guess what was happening, whereas I should have just been let it play out, put my stop below there. The next day, stop below the day, and maybe up until about now is where I'm going to get squeezed out. But um, in saying that, I mean, it was still a profit, but it's just the same thing. When you start listening to other people, you're not trusting yourself. Remember, it's a numbers game. We're only just trying to trade what we see and repeat that same sort of thing, read into it what we think is going to happen. You know, read into it here. We've got all these little beautiful inside levels. Actually, this is a cracker. Just want to show you a couple of really prime setups. You don't know what everyone else is thinking. You don't know what they've studied. And who's to know that the analyst knows everything? There's some cracking entry here. Beautiful, sitting on top of the MAs, holding a higher level. You buy the break out of the top. Same sort of thing here. And that was essentially the same sort of thing here, which I traded, but didn't. For some reason, I didn't like this pullback here. And that spooked me, but realistically, that was a trend up, and I'm buying it off the lower end. I got confirmation, I bought it. I just didn't hold on to it. So everyone cops, I guess, the same things. But I guess if you're trading from technicals, it's trade what you see, because markets can always go harder. What's that saying? Markets can remain insolvent for longer than you can remain solvent. So that's a sign. That's a common saying that people use if you're trying to double up on the downside, thinking you're trying to pick a bottom, and it goes lower, so you try to double up or stuff like that. This because you think, oh, it can't go any further, can't go any further. The markets can continue to go down and just put the maximum amount of pressure on everyone until everyone's capitulated, and then that's the time when it starts to rally. And it's the same probably on the upside. All right, I think hope that helped, John. Yeah, with AWC, I'd be quite happy with being out of that one, to be honest. Is it AWC? AMC? I mean, the daily, look at these last three candles. That's what I was meant to mention. Look at that red candle. It went up. It was up, open, down for the session, down for the session. It's not the world's best sign. I know it does it quite a bit. You can see through here, selling into the intraday selling here, potential selling into the highs, bigger funds. Maybe there's some selling coming to this high at 1580. We don't know. Longer term, like I said, it looks like it's going sideways more than anything. And we've got this major, price action we are just talking about. There is the potential where we could wash out this high, and that's going to be a key lower high on the longer term time frame. If you can see, that's going to be a lower high just in here below 16, say, and then you've got key level failing at 1650 1, 2, 3 times. Wash out here, a bigger wash out here. It's had to take a bit of a longer run up to get back in the highs and fails again. That could be all you need just to be out or reassessing from the sidelines. That's about it, guys. Probably, if there's anything else you want to look at, quickly chuck it in to the chat. Otherwise, we'll probably just call it a day there. Byron Energy was sort of one that I was looking at, but the weekly's not too crash hot. It's pretty much going sideways. It's not the best. You want to see, you can see the MAs are pretty much flat. If it's flat, you're just oscillating above and below the MA. It's not the best sign. You want them to start expanding to the upside. Something like this, and taking it when the MAs are heading higher. You got your first pullback, buy it off the MAs or buy your setup off the MAs. But at the moment, we're just not doing that. I was looking for a push up through 31 and potentially buying the pullback if MAs can cross back up. But today sort of killed that a bit. I think that's about it. So anyway, we'll call it a day there. We'll see how we go today. Don't forget there's a US, I think it's closed for, was it Martin Luther King Jr.? I think that's the one. Public holiday today, so the New York Stock Exchange is closed. Futures will be open a bit, so don't be surprised if there's a bit of argy-bargy on the overnight market. I wouldn't think there's much going to happen because they're closed. Long weekend in the US, so we're back on board tomorrow. See what happens overnight. I wouldn't expect much to be happening tomorrow, and just see how this ASX has sort of popped back up now, 10 points since we've been speaking. So see what that does. Anyway, guys, enjoy the rest of your day, and we'll speak to you again next week for the stream. And if you've got, like I said, any questions, feel free to send us an email to support@tradesetup.com.au, and I'll get back to you. All right, guys, enjoy your day. I'll speak to you again soon. Bye.